Good morning. This is Mayor Valensky with Driving Markets, and welcome to our Australia, New Zealand, Hong Kong, Singapore viewers. There, it's good afternoon or even good evening, depends on where you're at. Okay, so let's have a quick recap. So the market shot up yesterday. One of my senior colleagues told me on Friday that the market's getting ready for a melt up. Well, I'm not sure about the melt up's the right word, but definitely it was ready for a rise after 7 weeks of falling, and he got it spot on. And I do thank him. Thanks, Phil, for that. That is really great. And the market still shoot up yesterday. I'm negative on the markets, and I'm a bear on the markets. So I don't believe that the markets are going to continue with their sustained rise. In fact, the opposite. I think it's a dead cat bounce. It was good for a one-day trade that the market shot up. So the Dow was up 1.92% at 690 points, and the Nasdaq was up 138 points, and the S&P was up, I can't remember how many, but it was up also about 1.6% yesterday. So it was good for a day trade. The European markets were also up. In fact, Christine Lagarde, head of the ECB in the Eurozone, stated that the atmosphere is now right and ripe and changed markedly, and quoting her words, that they need to raise interest rates. Now, interest rates in the EC have been running at minus 0.5% since more or less 2011, with an odd occasion here and there, but it's the first rise since in the last 8 years. I was going to say since 2011. It's not true. It's the first rise in 8 years. So they've got presently minus 0.5% on the interest rates, and interest rates are going to rise in the EC. I've been stating over and over again that as far as the EC is concerned, they are well behind the curve, and they're living in fancy land or la-la land when it comes to inflation. Inflation in the EC, in the European community, is running at 7.4%. It's an absolutely shocking number. It's well above what they expected. And if you recall, for my Driving Markets on YouTube and broadcasts back in February and March, I stated clearly that they don't know what they're doing. And they said that inflation, they reckon, naturally is going to be under control by May, June. How can it be naturally under control by May, June when you've got a war raging in Russia and Ukraine? You've got the price of soft commodities going through the roof. You've got oil at $110 a barrel, which is likely to rise further. You've got rising interest rates. You've got corporate earnings that are being significantly affected. And they're stating that inflation is going to be naturally under control by June. This Christine Lagarde and all these heads of the banks, including Andrew Bailey, are they living in the real world? They're supposed to have economic degrees. They're supposed to have some financial analyst, unbelievable record, and all of them should be fired. They're complete and utter rubbish. EC, the European inflation rate, is going to go to well above 10%, and that's the official rate. I'm not talking about the unofficial rate. I'm talking about the official rate. The unofficial rate is running at between 20 and 30%. So the EC did a favor for the euro yesterday. The euro rose, and the greenback, the US dollar, came off a little bit against all currencies. But that, in my opinion, is short-lived, because I reckon the US dollar is going to get stronger as we move on, and therefore it's going to be a big sell for the euro. The euro is a sell. You need to go short on the euro, because I still believe we're going to go down to one-on-one parity when it comes to euro. Also, Joe Biden said yesterday that they're going to think of easing tariffs on China. Wow, that's going to give China a massive boost in terms of the GDP, and it's going to reduce business in the States. So Joe Biden's got it wrong again. What they should be doing is maintaining tariffs on China, okay, and boosting the US economy. But they're not. They're boosting the Chinese economy and end up reducing the US economy. So once again, Sleepy Joe and Kamala Harris, the two most incompetent people that ever run in the States, never mind actually run the States, have got it wrong again, and they're going to cause significant damage. Keep an eye on that one. It's only going to get worse in the US. Now, what was interesting is that the US Treasury also spiked up yesterday, the first time in 3 sessions, purely based on the fact there was a lot of bulls out there. A lot of investors went out to buy stocks. So they sold the US Treasury and they bought into stocks. But that's likely, again, to be short-lived. You expect the yield on the US Treasury to go down as more investors turn to security and safe havens as the years go on. Israel also increased out of the blue its interest rates yesterday by 40 basis points, following on with the rest of the world, trying to cool down its property market. That was just an indicator. You've got Australia, Canada going to increase their interest rates. So there's a global atmosphere of rising interest rates, and that's going to impact on shares. Jamie Dimon came out yesterday. He's the CEO of JP Morgan in the States, and he said everything's rosy. The US economy is very, very stable. They've got full employment. There might be a little dark cloud here and there, but he sees there's significant stability, and he does not see an economic slump as far as the US concerned. Well, I'm sorry, Jamie, but you've got it wrong. What's likely to happen going forward is that because of the lack of liquidity in the NASDAQ and the lack of funding and rising rates and the cost of borrowing, then what's going to happen is you're going to have more companies. As a result of tech stocks falling, you're going to have the surrounding services that support the NASDAQ companies. They're going to go down, and that's going to lead to higher unemployment. So Jamie Dimon, of the CEO of JP Morgan, you've got it wrong. From driving markets, Jamie Dimon's got it wrong. So just take an eye out. Diamond, however you pronounce his name. Also look at eToro. eToro is a trading platform, and they've scrapped their SPAC. They were going to merge with another company, Vimex, and they scrapped their SPAC IPO because the market's not ready for it, and their valuation has dropped significantly from round about was initially 10 billion or 15 billion, it's dropped down to 8.8 billion or even lower. So they are now going around to see if they can raise money because they lost $265 million. Now, how long can these high-tech companies continue losing money and going to the investors and the public and saying, give us money, because there's no money around, especially with the rising rates. There's going to be reduced liquidity. Anyhow, my time's up. This is Mayor Walensky with Driving Markets. You catch me on Instagram also. I do reels during the day for 1 minute, and you catch me on Twitter. I give comments on Twitter and LinkedIn. You should subscribe on YouTube, but stay short of the market. Have a good day. Stay well. All the best.